I'm about to share with you one of the most powerful strategies that I have in my tool belt. Not only to keep wealth and pay off debt in a fraction of the time, but also to build wealth and to go out and to be able to buy assets. Welcome to Flippin' with Mitch and Maley. I'm Mitch Nelson, and this is the first video of a 13-video series about paying off your mortgage in a fraction of the time, without having to get a raise at your job and without having to change your lifestyle. If you haven't already, be sure to hit the subscription button and ring the bell so that you don't miss any of the videos in this amazing series. This is a simple strategy, but it's life-changing. You don't want to miss it. Remember that as we go through this strategy together, I am not your attorney or your accountant, your financial advisor. I'm not a broker or an agent. I recommend that you engage the services of professionals in making decisions that have a legal impact, especially financial decisions. Now, with that out of the way, let's jump in. The strategy that I'm going to share with you in this 13-video series is called velocity banking. It's important that we pull back the curtain on our relationship with the bank and that you understand that banks aren't really here to help you reach your financial goals. Their primary goal is to make money off their customers, you. And banks usually make money through interest. The more interest they get you to pay, the more money they make. They do this by using some fairly straightforward strategies to get you to behave in certain ways with your money. The first thing that you can do to combat this and to start saving interest is increasing your knowledge around the banking system and understand how to start using your relationship with the bank to your favor rather than theirs. In this video, and throughout this 13-part series, we're gonna break down how the bank gets you to give them all of your money and how you can start avoiding it, all culminating in a strategy that we refer to as velocity banking. Some of the biggest benefits that I find with the velocity banking strategy is that you can pay off your debt at an accelerated rate. And that very system that we use to do that allows you to avoid paying a whole lot of interest, even though those tools might have a little bit higher of a quoted interest rate. That may sound crazy, but we're gonna get into how that works. I'll show you the breakdown of the math and you'll see exactly how you'll save as we get into it. Now, the principles that we use allow us to bypass a ton of interest, and we end up saving money in the long run. We also pay way more principal towards the debt, so we're paying down the debt much faster. And that's how we increase the velocity in which we pay the debt down. By doing this, we also increase our monthly cash flow. The banks use a strategy called cash segmentation, which is designed to keep you unwittingly paycheck to paycheck. Cash segmentation encourages you to spread your money out and to spread your debt out. You're encouraged to split your monthly income into checking accounts and savings accounts and money markets and retirement accounts. Every time you get a loan or purchase something on credit, it creates a new line item. And with that line item comes a new payment that you have to pay. All of this splits the pie that is your income into smaller and smaller slices, leaving less and less for you at the end of the day. If you can reduce the number of places that you're sending your cash on a monthly basis, that will make your monthly cash flow go up, even if the total dollar amount of debt stays the same. Our end goal is to try to get all of your debt and all of your cash into one banking vehicle, like a home equity line of credit, for example. Think of this like debt consolidation, but also adding in the idea of cash consolidation as well. Through this process, you'll potentially gain access to more of your cash. You'll acquire more real estate, and you'll achieve more financial independence. If that still seems confusing, don't stress. I'm gonna go into great detail on cash segmentation and how to fight it throughout this series. Make sure that you're subscribed and that you ring that bell so that you don't miss out. So what is velocity banking? Well, velocity banking is a strategy used by the wealthy whereby common banking tools like lines of credit are leveraged to increase your monthly cash flow, pay down the principal on your amortized loans, and accelerate the overall debt payoff to minimize the amount of overall interest paid. Velocity banking uses math to exploit the advantages for the consumer, you, over the bank, in the use of certain banking tools over other more common banking tools. Learn to use financial strategies and verify with actual math to make financial decisions for yourself. Hey, if this strategy is so great, then how come everyone's not doing it? Well, I would say that the biggest reason is because the banks are businesses. Their goal is to make as much money off of you and their other customers as they possibly can. Why would they tell you to bank in a way that would make them less money? School never told us about it. The public education system actually taught us very little about managing our finances. Financial advisors have never heard of it. Banks don't want you to know about it. The mainstream media doesn't understand it. Your parents didn't do it. Dave Ramsey and Susie Orman didn't teach it, and your broke brother-in-law said not to do it. Those are the top 7 reasons why people don't actually go out and use this strategy. So the biggest reason why people don't use it is they simply don't know about it. And that's why I'm here talking to you about it, because I think it's an amazing tool, and I think more people should be using it. We are not taught a whole lot about finances, so we tend to be scared of the topic altogether. We just do what our parents did. Ask yourself, do I only want to achieve what my parents achieved financially? Or do I want to achieve more? Because if you only want to achieve what your parents achieved financially, then fantastic. Take their financial advice, you'll end up just like them. Otherwise, you should be studying finances, you should be studying banking and taxes and real estate investing and business ownership so that you can understand how to go beyond what they did. Here are some key goals that you should have as you navigate this strategy. Do whatever it takes to pay down debt quickly. Create and control more cash flow. Create more financial security. Be responsible with credit utilization. This strategy does use your credit, and we'll get into more details about how to do that responsibly. Pay less actual money towards interest, regardless of your interest rate. These should be your goals as you navigate this strategy. Now, I know this is a lot, so if you have questions, please put them in the comment section below, and I will answer them as quickly as possible. Or, for a more interactive approach, you can schedule a free one-on-one strategy call with one of our elite Flippin' with Mitch and Maley coaches. Just go to flippin.education or click the link in the description below. Throughout this 13-part video series on paying off your mortgage and debt, I am going to show you ways that you can use debt and leverage debt in order to pay off debt faster and get to a point where you're actually financially free. So make sure that you smash that subscribe button and ring that bell so that you don't miss the next video, which is gonna drop in a couple of days. We're going to be talking about debt payoff, we're gonna go through the entire velocity banking strategy, and we're going to apply it to the average American household financial model so that you can see exactly how it works. Now, keep in mind that there are risks in every financial strategy, so be sure to educate yourself thoroughly as you go out and start playing with these strategies. And until next time, we'll see you on the flip side.